Let's go to our call of the day. It's JMP Securities on Tesla, one of the few stocks in the green today. JMP analyst Joe Osha upgrading the stock to outperform and setting a street high price target of $1,060 per share. Joining us now to discuss the call is Joe Osha. So, Joe, you had a market perform rating on the stock since October. Why make the call right now, especially given all of the volatility that we are seeing on the street?
Yeah, thanks for having me on the show. I would say a couple of things. It's obviously been quite a couple of months watching the stock move, but we had been and continue to be positive on the company's competitive position since we started covering the stock. I downgraded it in October because I was worried about some intermediate term demand concerns, which turned out to be a huge mistake. But our position, which has been that this company has far and away the best products, is going to continue to take market shares, is pretty much unchanged. And so I just took an advantage of this recent reversal in the stock price driven by the market to get that viewpoint back out there.
And Joe, when you look at the company right now relative to its competitors, you guys note Tesla right now has about 40% of the actual addressable market for electric vehicles. Let's say we have some kind of a macro event here that slows down growth first half of this year, let's say, does there a chance here that Tesla actually increases its lead over its competitors if you see a traditional OEM kind of retrench in a more challenging environment? Does Tesla kind of in that setup actually have more leverage against its competitors than even the market is appreciating?
Well, it's an interesting point. I will say that I did actually, even though I upgraded the stock, I did actually reduce my estimates for Q1 and Q2. I think you've got to, given the China exposure. But yeah, consider Ford, which is obviously under some financial pressure and is trying to ramp this Mach-E electric Mustang. I'm pretty sure they lose money on every unit they make. So to the extent that pressure on that company increases financially, you could certainly see them step back from ramping volume on the Mach-E. I think that's true.
Hey, Joe, Brian Chung here. So it seems like to me, the Tesla story is so fascinating because it's been interesting to watch all the analysts try to figure out what the price targets are. You have downgrades with upgrades on the actual price targets, for example. In your history, I guess, of looking at maybe not just Tesla, even other stocks, how difficult has the last, let's say, 6 to 8 months been in trying to figure out what the proper valuation of this company is? Or is it pretty easy because you know exactly what the long-term vision is for this company?
It's pretty humbling having been in a market perform while the stock moved up so much that the market keeps you humble, right? I think it's very important rather than just simply looking at the chart and backing into a valuation that gets you to where you want to be, to sort of step back and say, okay, right, this year, next year, fine, but how big can this company be in 5 years, 10 years? Can I support that with analysis based on the market size, the competitive environment, and so forth? And once you do that and try and risk adjust it, it gives you a little bit more to get your fingers into. It's a lot of work, but if that ends up justifying a 32 EBITDA multiple, then so be it. But it has to be more about just, hey, this year's multiple. You've got to ground it in looking out a decade or so, which we've done.
Joe Osha of JMP Securities, thanks so much for joining us on your Tesla call.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.